Live. So hello everyone, my name is Timothy and welcome to my YouTube channel. Today I have a student that shall be learning together, and I hope we are going to learn something at the end of the day. So this is the first video of how we trade and how we analyze the markets, and I shall be explaining it step by step in order that at the end of the day, at least you guys will be able to have an understanding of how we are able to execute our trades, how we are able to get our positions, and so on and so forth. So we shall be looking at what we call market structure. This is very critical structure. So market structure is very simple. Market structure, it's just like a language. It's just like a language in every language. Unapata, if you want to speak in Kikuyu, you have to learn Kikuyu. If you want to speak in Chinese, you have to learn Chinese. If you want to speak in Kalenjin, you have to learn Kalenjin. So the same way also, if you want to trade the markets, you must understand what the market is saying. Sometimes you may find that the market is angry, sometimes the market is happy. So you have to understand what is happening to the market at a specific time, and that's why we studying market structure is one of the most critical things that somebody has to study in order to be a profitable trader. So market structure, normally we say that the market structure is divided into two ways. So these two ways we define market structure. We have the simple way of defining market structure. Okay, the simple way, and then we have the advanced way. So the simple way of defining market structure, normally here we state that that the market is in two states only. Here we say that the market is in two states. So the market, so in the simple way of defining market structure says that the market can only be in two states. Number one, it can be in what we call a consolidation or range. Another name for consolidation is range. And the next step is what we call an expansion. So I'll explain. For example, when price is in a range, basically it doesn't move in any direction. It just consolidate in that area. For example, you may find that price is just in one area. It doesn't want to move maybe upwards or downwards. So in this scenario, we say that the price is in a range. Okay, we say that the price is in a range. Another name for a range is consolidation or consolidation. Okay, then so it says that the market is in two states. We have a consolidation or range. Then the next state is what is a state which we call the expansion state. Okay, so expansion can be in two sides. We can have expansion upwards, which is going upwards, or we may have expansion downwards. Okay, so this is expansion upwards, then we have expansion downwards, whereby we are forming a series of okay, let me delete this one. We are forming a series of low, high, low, high, low, high, low, and so on and so forth. So in this scenario here, we say this is expansion upwards. Another name for expansion upwards is what we call an uptrend. This is what we call an uptrend. Okay, then this one is expansion downwards, and another name for expansion downwards is what we call a downtrend. So this one is what we call a downtrend. Okay, this what we call a downtrend. This is what we call a downtrend. So expansion upwards is an uptrend, and expansion downwards is what we call a downtrend. So the simple way of defining market structure states that the market can only be in two states. It can either be in a ranging state, or it can be in an expansion state, whereby it can either be expanding upwards or it can be expanding downwards. So let's look at some of the examples in the chart and see whatever is happening. So we can see here, I'll just have to zoom out so that we can be able to see it clearly. You can see here the market is expanding upwards. Okay, the market is expanding upwards because we're moving up. And this scenario here, the market is expanding downwards because we are going down. Like you can clearly see that the market is going down. Okay, then in this scenario here, we can say that the price is ranging, or it's consolidating, because it's not going either upward or downward. It's moving up, going down, up, down. So you can't tell clearly where the price wants to go. That's why we call it a range. Okay, then we can also see here, where is that? There's a shape I'm looking for. Eclipse here. So you can see from here to here, this is what we call, yes, tell me which state is this one?
This is upward.
This is an uptrend. Okay, this is an uptrend, because clearly you can tell that the price is moving upwards. And then this one, what can we call this state over here?
This is ranging.
Yeah, it's a ranging state. Okay, it's a ranging state. Then let's finish with this one. What can we call this state?
Okay, this is downward.
Yeah, that's a downtrend. Okay, or expansion to the low. So this now you can see how the simple that was a very simple way of defining market structure, that the market can either be in a range or expansion. So expansion in two ways. We have expansion upwards, which is an uptrend, and expansion downwards, which is a downtrend. So that's basically how we were defining our market structure. So I think, is there any question so far, Adiapo?
No, iko sawa,
Okay.
tuendelee.
So when you're expanding upwards, we form a series of what we call so when price is moving upwards, let me just mark it out. So this is an uptrend, for example. Okay, something like that. So when you're moving upwards, price will form a series of what we call a higher high. Okay, a higher high, and this is a higher high, this is a higher high, this is a higher high. So why do I call this one a higher high? Because this high over here, okay, I'm trying to mute you.
Oh, sorry.
Yeah.
It's okay. Sorry, I ignored.
Okay, you can mute. Then if I just ask you a question, you can unmute so that we can have a clarity in our discussion.
Sure.
Or if you have any question you want clarification, just unmute.
Sawa, that's fine.
Yeah. So okay, so we said these are high, then these are high low. So these are high low. Okay, then this is also high low. Okay, and so on and so forth. See if we, okay, that's there, then that's there. So why do we call this a high? You see, these are high because it is higher than this point over here, but this high is higher than this one. That's why we call this one a higher high. This high is higher than this one. That's why we call it a higher high. Let's look at the low. This one is a low point because it is lower than this point over here, but this low is higher than this one. So that's why we say this is a higher low. Okay, this low is higher than this one. That's why we call it a higher low. This happens when price is in an uptrend. Okay, that happens when price is in an uptrend. But when price is in a downtrend, Let me just show you. When price is in a downtrend, okay, so downtrend, price will form a series of lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so on and so forth. So this one is what we call a lower high. Okay, lower high. 2, 3. So we have these a lower high, that's a lower high, that's a lower high. Okay, then we have lower lows. This is a lower low. Okay, let me just copy and paste. So these are lower low, lower low, lower low. So you can see now the difference. When you are in an uptrend, we form a series of higher highs and higher lows. But when we are in a downtrend, we form a series of lower highs and lower lows. These are high and these are low. These are low, these are low, these are low. But the difference is that this low is lower than this one. That's why we call it a lower low, which is different from this one over here, because this one is forming a highs and highs and highs and highs. So I hope that is clear. So these are lower high, lower low, lower high, lower low, and so on and so forth. So let's look at the examples in the chart and try to tell whatever was happening. So in this scenario over here, you can see that price is in an uptrend. So let me just use even the line graph so that we can have a clear vision. So because this is an uptrend, price will form a series of higher highs and higher lows. Okay, are we together? So
Sawa, iko sawa,
so
iko
you
sawa.
can see these are high, these are higher high, then these are low, these are low, higher low, okay, higher low, higher low, and so on and so forth, because we are in an uptrend. So if we are in an uptrend, meaning we are forming a series of higher highs and higher lows. Okay, this is also a low, so this will be a higher low, and so on and so forth. But if you are in a downtrend, we said that if you are in a downtrend, what shall we be expecting? Price will be forming a series of lower highs
Lower highs, lower
and
low,
lower
yeah.
lows. Okay, so you can see in this scenario over here, this is a lower high, lower high. Okay, lower high, and then we have this as our lower low, lower low. Let me just copy paste. That's a lower high, that's a lower high. Okay, that's also a lower high, lower high also. And then this is a lower low. Okay, that's a lower low. Let me just mark it out. Lower low, and then lower low, and so on and so forth. So I think that's very simple. Okay, that's very simple to be able to understand that when price is in an uptrend, we form a series of higher highs and higher lows. When price is in a downtrend, we form a series of lower highs and lower lows, and so on and so forth. That is basically an understanding of what we call a market structure. So the last thing that we shall be covering today is the concept of change of character and the concept of break of structure. So let's write that down. Concept of change of character and break of structure. So this is also very important, just as it is important to know when the mood of someone has shifted, it's also important to know when the market is also shifting. Okay, so you may find that if price is shifting from being bullish to bearish, there is a name for that, and it is very important for us to be able to understand what does it mean if price is shifting from being bullish to become bearish. So what opportunities shall we be looking at? What potential trades are we looking at? It's very important to have an understanding of this. So let's take a scenario whereby price is pushing up. There's a high, low, high, low, high, low, high. Then we shifted. Okay, we became bearish, shifted again. then we formed that, we shifted again, we pushed up. Okay, so when price is breaking a high to create a new high, as long as it is a continuation of the direction where price is going, we call that a break of structure. Okay, we call that a break of structure. There's a break of structure. Also in this scenario, you can see price broke a high to create a new high, and it is moving in the direction where price is moving at. We call that a break of structure, which is the BOS. Okay, the break of structure. Okay, then you have also this one over here. Price broke this high to create a new high. Break of that high. This is a break of structure also. Then we were waiting for price to come and break this high, but what happened is that the low was broken. So when the low is broken, this shall be called a change of character. So these things that I'm teaching you in basics too. So from tomorrow we shall now be looking at the advanced things, which is very simple actually, not even advanced. It's very, very simple. So we have a change of character. Why? Because price has changed character from being bullish and now we are bearish. Why? Because we broke this low over here. So now we are bearish. So this is a change of character. Price has changed character from being bullish and now it's bearish. Then it has broken this low, meaning continuation of the cells. So if it has broken the low, this is what we call a change of break of structure. Why? Because we have broken this low to create a new low. So this shall become a break of structure again. That shall be a break of structure. This also shall be a break of structure because we are breaking a low to create a new low. So we were waiting for price to come and break this low, but we were not able to break the low, but rather we came and broke this high. So price has now shifted again. It was bearish, but now it has become bullish again. This is a change of character. So it will be a change of character because we have shifted from being a downtrend and now we are becoming an uptrend. So this is a change of character. Then we continue with break of structure because we are basically breaking structure to create a new structure. Okay, breaking structure to create a new structure. I hope that's very clear. So in summary, let me just write something in summary so that we can be able to have an understanding. Sorry for that. The clips, I put along my favorite. So if price, you can see in this scenario over here, price was moving upwards. So if it is moving upwards, if it's breaking a high to create a new high, that will shall be called a break of structure. Okay, but the moment now price has changed direction, for example here you can see that the price has changed direction, it has become bearish. This one shall be called a change of character. Other hizi zingine zote, these ones are break of structure, break of structure, break of structure. And also the ones that are inside here is break of structure, unless price is shifting. Okay, unless price is changing direction is when now you can say change of character. Otherwise we are focusing on break of structure alone. Are we together? Okay, so you can see also this one, we are in a downtrend. Then we also change character again in this point over here. Okay, change character, and now we became bullish. I hope they are making sense.
They know that.
Yes.
It's okay. Yeah, tuendelee.
Yeah, I hope it's making sense. So if you are now, we are changing direction, that's the only point we shall be saying a break of structure. Otherwise, a change of character. Otherwise, we shall be saying a break of structure. So let's look at some examples in the chart, and I'll be looking maybe in the higher time frame because I like the higher time frame. So we say that if price, you can see in this scenario over here, price was breaking structure. This is a break of structure. This is also a break of structure. So basically what it does, that inaniambia price iko bearish, break of structure. Then we have break of structure, and then we are waiting for this low to become broken, but it was not broken, but rather what happened, this high became broken. This is what we call a change of character. So we have changed character from being bearish. In this scenario you can see we were bearish, tulikuwa tunateremka chini, we are bearish, and now we have become bullish because we are basically moving upwards. Okay, we are moving upwards. That's now, this is now what we call a change of character. Hizi zingine zote break of structure, then this one also is a break of structure, and so on and so forth. So you can see the difference of change of character and also a break of structure. As simple and as easy as that. As simple and as easy as that. So I think we have been able to cover the concept of market structure in a very nice way. Tomorrow we shall be looking at the advanced way of defining market structure. By the time we are reaching Friday, we shall be dealing with very different things. This is just for us to be able to understand whatever we shall be coming to learn maybe later during the day. So just a recap of whatever we've been able to learn today. We were learning about market structure, and we say that the market structure is defined in two ways. We have the simple way of defining market structure. We have the advanced way of defining market structure. Today we are looking at the simple way of defining market structure, and we said that the simple way of defining market structure, we say that the price is in two states, okay? It can either be in a consolidation or range, or it can be in an expansion. So we look at an example of a range or a consolidation, and we say that the price is moving sideways. Price has no clear direction, okay? That's what we call a range or a consolidation. Then we have the uptrend or expansion upwards, which is price is clearly moving upwards. Then we have expansion downwards, where price is clearly moving to the low, okay? Then we came and defined the market structure. We saw that if price is moving upwards, we form a series of higher highs and higher lows, and when price is moving downwards, we form a series of lower highs and lower lows. I hope that's clear. Then we came and looked at the concept of change of character and break of structure, and we said that, for example, if price is moving upwards, if price breaks a high to create a new high, that's what we call a break of structure. Also, when price breaks a low to create a new low, that's a break of structure. Otherwise, if price is changing direction from being bullish to become bearish, or from being bearish to become bullish, that's what we call a change of character. That's what we call a change of character. And that's the things we have been able to learn. I hope you have been able to understand. So at this juncture, I want to welcome questions or any clarification that you want me to do.
Okay, I think everything is very clear.
Yeah,
I
so
don't have any. Yeah.
don't worry, because also this session I'll upload it to my YouTube channel. In case you have any question, you'll just go and revisit it again, or also you can just send me a message, and I'll be able to respond to you.
Okay.
It is easier for me to respond to text messages.
All right.
Yes. Otherwise, thank you so much for your time. I appreciate your time.
Okay. So tomorrow same time 8.
Tomorrow by 8, and make sure niko kwa nyumba so that we can be able to cover these things very, very fast.
Okay, so.
Yes. Otherwise, thank you for your time. I appreciate. You have a lovely,
Thank you.
lovely evening.
Same to you. Thank you.
Okay.